Welcome back to the Iraqi Dinar channel, everyone. Today we bring you breaking news that has the global financial world buzzing. Vietnam has just announced a major revaluation of its national currency, the Dong, and the impact is being felt across markets from Asia to the United States and Europe. What started as a typical morning in Hanoi quickly turned into one of the most dramatic financial events in recent memory. Investors and currency watchers alike were caught off guard as Vietnam confirmed a historic adjustment that elevates the Dong to levels far beyond any previous expectations, marking a monumental moment for both the country and global markets. The announcement came just before sunrise in Hanoi, catching traders and analysts by surprise. For decades, the Dong had been held artificially low, reflecting cautious monetary policy and a gradual approach to international economic engagement. But today, that all changed. At precisely 6 a.m. local time, the Vietnamese Ministry of Finance officially confirmed what had been circulating as speculation in trading circles for weeks. The Dong had been comprehensively revalued. The effect was immediate and staggering, redefining how the currency is perceived on the global stage. Investors across financial hubs, from Singapore and Tokyo to London and New York, scrambled to react. Trading floors erupted as screens flashed the new rates, phones rang endlessly, and emergency meetings were convened in skyscrapers housing major banks. The Dong, which had long traded at over 23,000 to the US dollar, surged to a level that experts are calling revolutionary. This sudden move sent shockwaves through markets worldwide and has already sparked a flurry of speculation about what comes next. The revaluation is more than just a technical adjustment. Economists are describing it as a statement of financial independence and an assertion of Vietnam's growing economic power. Sources within Vietnam's central bank report that the decision was finalized during a high-security meeting attended by top government officials, economists, and foreign advisors. Months of private discussions with the International Monetary Fund and major Western banks led to this historic moment, aimed at positioning the Dong as a truly global currency. Inside Vietnam, the response has been electric. Crowds gathered outside major banks in Hanoi and Ho Chi Minh City, phones in hand, watching the numbers update in real time. Ordinary citizens who held on to Dong notes for years as savings or investments were experiencing what many described as a once-in-a-lifetime miracle. Emotional scenes played out in the streets as people realized the newfound value of their currency, with some shedding tears of joy at the sudden transformation of their financial reality. Online platforms lit up with reactions from currency holders both in Vietnam and abroad. Screenshots of exchange rates, emotional posts, and celebratory messages flooded social media. Investors in the U.S. in private currency speculation groups were equally ecstatic. Many saw this moment as a turning point, a rare opportunity that reshapes global currency dynamics almost overnight. Meanwhile, major banks in Asia and beyond were urgently recalculating their positions, updating reserves, and adjusting to the new reality of a significantly stronger Dong. Experts note that this revaluation, while sudden in appearance, is the result of years of meticulous planning. Vietnam has quietly grown into one of Asia's fastest expanding economies, fueled by technology, manufacturing, exports, and foreign investment. Its strategic partnerships with nations like Japan and the United States have positioned it as a key player in the global supply chain. Until now, the Dong's low valuation helped maintain competitive exports and domestic purchasing power. But today marks a new chapter where the currency finally reflects the nation's true economic strength. Global analysts are calling this one of the most significant currency events since China's major adjustments in the early 2000s. The effects are expected to ripple across international markets, with billions of dollars potentially shifting as investors adjust to the new reality. Banks in the U.S. and Europe report a surge in inquiries regarding Dong exchange and redemption, with some trading platforms temporarily pausing transactions to manage overwhelming demand. Behind the scenes, some American banks had quietly prepared for this scenario. Sources indicate that institutions like Chase and Wells Fargo had contingency plans for large-scale currency exchanges, awaiting confirmation of the revaluation before taking swift action. The strategy was clear: observe silently, then act decisively. This preparation has allowed major financial players to respond quickly to what could have otherwise been a chaotic market event. From a government perspective, officials describe the revaluation as necessary to reflect Vietnam's progress and recalibrate its place within the international financial system. Analysts also point out the geopolitical significance. Vietnam is signaling its readiness to compete as an independent financial power, stepping confidently onto the global stage amid instability in other markets, including Europe and China. Questions naturally arise as celebrations continue. How will this impact trade, inflation, and debt? Will the dong maintain its new value, or will we see volatility in the coming weeks? Analysts are working around the clock, projecting short-term and long-term effects. While some anticipate greater consumer spending power and economic growth within Vietnam, others caution that export costs could rise temporarily as businesses adjust to the stronger currency. The Vietnamese Prime Minister addressed the nation, emphasizing that this revaluation reflects the strength, unity, and resilience of the people. He highlighted decades of collective effort that have brought Vietnam to this milestone, framing the currency adjustment as both an economic and moral victory. Public response has been overwhelmingly positive, with citizens celebrating not just wealth, but national pride and recognition on the world stage. Global markets are reacting in real time. The US dollar has dipped slightly against a basket of Asian currencies, while commodities like oil and gold have seen rapid fluctuations. Both the IMF and World Bank released cautious statements acknowledging Vietnam's decision, urging stability and coordination. Yet among investors and trading networks, excitement and optimism dominate. Many see this as a historic opportunity with far-reaching implications. Already, multinational corporations with operations in Vietnam are reviewing contracts and labor costs, while local consumers are experiencing newfound financial empowerment. Foreign exchange offices across Asia report unprecedented demand, with lines forming in cities like Kuala Lumpur, Manila, and Bangkok. Many establishments have imposed temporary limits to manage the surge, highlighting the extraordinary scale of the revaluation's immediate impact. Financial experts are comparing this event to historic revaluations of currencies like the Kuwaiti Dinar post-war and the Japanese yen after Reconstruction. However, Vietnam's adjustment carries a unique energy, hope, unity, and a sense of opportunity. Unlike historical examples driven by necessity, this revaluation reflects strategic choice, marking a new chapter in global finance. The ripple effects continue. Investors, traders, and ordinary citizens alike are closely monitoring the dong's performance, eager to understand how this transformation will influence international trade and investment patterns. For some, this represents a chance to participate in a moment of economic history. For others, it's a confirmation that Vietnam has arrived as a formidable financial power on the world stage. Within Vietnam, businesses and households are adjusting rapidly. Entrepreneurs are recalculating costs, banks are updating internal systems, and consumers are reconsidering spending and saving strategies. The psychological impact is significant. Money that once seemed negligible now holds substantial power, fueling optimism and a renewed sense of economic agency. As the day unfolds, global media continues to cover the story extensively. Analysts are working around the clock to model potential outcomes, from trade balances to foreign investment inflows. The consensus among experts is that while short-term volatility is inevitable, the long-term trajectory positions Vietnam and its currency favorably in the global economy. Social media remains alive with real-time updates, celebrations, and discussions. The narrative is clear. Vietnam's dong has entered a new era, both in financial markets and in the hearts of its citizens. For holders of the currency worldwide, the revaluation is a moment of validation and opportunity, sparking conversations about wealth, investment, and national pride. Market strategists are already predicting adjustments in foreign exchange strategies, with new trading products and contracts expected to emerge in response to the dong's revaluation. The move is reshaping perceptions of currency strength, particularly in Southeast Asia, where Vietnam's growth story is now being matched by the tangible power of its money. Financial historians are noting the event as a defining moment in 21st century global economics. Unlike reactive revaluations in the past, Vietnam's adjustment is proactive, calculated, and symbolic, a demonstration of economic maturity that commands attention from investors and policymakers alike. For ordinary citizens, the impact is immediate and personal. Small business owners, retirees, and everyday savers are seeing their holdings gain real value overnight. Emotional reactions, viral social media posts, and in-person celebrations highlight the tangible benefits felt across communities, signaling a newfound sense of financial empowerment. As global markets digest the news, analysts emphasize that while volatility may persist, the revaluation signifies long-term opportunity. Vietnam is now firmly on the map as a country with both economic strength and strategic vision, demonstrating that careful planning and timing can yield transformational results. The revaluation also underscores the interconnected nature of today's global economy. Shifts in one currency can trigger adjustments across continents, influencing trade, investment, and policy decisions worldwide. Vietnam's move is a case study in how a single, decisive action can reverberate across financial systems, inspiring both excitement and caution. In closing, this historic revaluation is not just a financial event. It's a story of ambition, preparation, and national pride. Vietnam has redefined its currency, reshaped market expectations, and asserted itself as a rising power in the global economy. For holders of the Dong and international investors, today marks a milestone that will be remembered for years to come, a moment where strategy met opportunity and transformed the world's perception of a single nation's economic potential. And that's the latest on the Vietnamese Dong revaluation here on the Iraqi Dinar channel. We'll continue to follow the story closely as developments unfold across global markets and provide updates on how this historic move is shaping the financial landscape worldwide. Stay tuned, stay informed, and as always, thanks for watching.